Hello and welcome to Stock Market Fever. Today is Thursday, July 14th, 2022, and in this video we're going to analyze and evaluate the incredible ride of Marathon Oil. We will look at Marathon Oil to see how the company has been financially performing over the last 3 years, see how its share prices have been responding, and look at what industry analysts are forecasting for its future. And you'll definitely want to stay tuned to the end as we at Stock Market Fever make our own forecast, our target price for Marathon Oil. Marathon Oil, located in Houston, Texas, is a $15 billion energy company that works in some of North America's biggest and most prolific oil basins, including the North Dakota Bakken oil field, the New Mexico portion of the Permian Basin, and the Texas Eagle Ford Shale. Marathon Oil is not a pure play like the majority of oil companies, and its asset portfolio is generally split equally between natural gas and petroleum. If you were to look at Marathon Oil's earnings over the last 3 years, you'd understandably see a big dip from 2019 to 2020 as earnings plummeted from 59 cents per share to a loss of $1.83 as the price of oil plunged all the way down below $15 a barrel in response to massive COVID shutdowns, resulting in a huge drop in demand for oil. But as the world started reopening for business and the demand for oil pushed the price to over $100 per barrel, Marathon's fortunes improved, and their GAAP earnings for 2021 were $1.20 per share. Reflecting Marathon Oil's wild earnings ride over the last 3 years, their share prices have also been on a roller coaster. 3 years ago, Marathon was trading just under $15 per share at the height of the pandemic shutdowns. Marathon stock went all the way down to $3 per share. But since then, Marathon share prices have been on more or less steady upward trend, peaking at $33 per share in early June, before plunging about a third in value down to about $21 per share in about a month, as the giddy price projections for oil burst as a result of inflation fears and a robust rising dollar. And what do industry analysts forecast for Marathon Oil moving forward? Well, as of July, there were 27 analysts covering the shares, with 12 of them giving Marathon a buy or strong buy rating. 13 analysts gave a hold rating, and 2 rated the shares underperform. Overall, this is a moderately bullish recommendation, but with an average target price of $31 to $33 per share, analysts believe this stock can move rapidly upward, particularly if the price of oil recovers from its recent swoon. But recent big-name analysts, Goldman Sachs and Citigroup, were less positive on Marathon Oil's target price, lowering their estimates to $25 and $24 respectively. And where do we at Stock Market Fever forecast Marathon Oil's price going forward? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. With the big news out that June's consumer price index was up over 9%, pressuring the Fed to raise interest rates perhaps at a faster clip, it is possible that Marathon Oil could see some short-term selling pressure. But we do not believe the price of oil will continue its recent decline, as we don't agree with the forecast for a deep recession as much of the doom and gloom analysts have been forecasting. We believe that demand for oil will remain strong, and that when we factor out the U.S. releasing 1 million barrels a day from the strategic reserves, which will end in a few months, perhaps after Election Day, that oil prices will surge even higher, back to $120 a barrel or even higher. The U.S. economy is simply too hot, and that even with the Fed tapping on the brakes steadily, there is simply too much cash in the system and too much demand for just about everything, and the meeting of that demand will require more and more oil. That said, we cannot ignore the short-term overall negative sentiment in the market, as the fear of a recession creates a short-term, self-fulfilling slowdown, and the short-term continued release of reserves brings pressure to pair. Overall, we are bullish on Marathon Oil, and we believe that with the share prices of $21 and the long-term trend of oil going back up, we believe the stock is currently overly discounted and that by the end of the year it should be trading in the $30 price range. But what do you think? Where do you think Marathon Oil is heading in the short run and long run? Would you recommend buying, selling, or holding, and why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.